Hello and welcome, everybody. SF Live, episode 100, anniversary edition today. I'm joined by, or in a few seconds, I'll be joined by Durrett. He's goldstockdata.com. He's the head analyst there and chief publisher. I should have asked you for your proper title, Don, but it's yours. It's your baby, goldstockdata.com. And we'll switch over in just 1 second. First, I just really want to say thank you. This is the 100th episode. We wouldn't have done it without the feedback of our listeners and viewers. Really appreciate that. Thanks for following us on Twitter. Thanks for following us on YouTube, giving us feedback on how to do better. And this is for you guys. This is not to make us look good. This is information for the investors. That's why also please be reminded to use hashtag AskGSD, and we'll go check that on Twitter. Ask your questions for Don as well. Get them in while we're live here, and we'll get to those as well. Make sure to follow us again on YouTube, on Twitter, and also Spotify, Instagram, and other channels. Really appreciate that. And now it is my special honor to welcome Don back on the program. We only chatted 4 weeks ago, and I'm excited to have him back on because his insights were really valuable. We got some amazing feedback on our episode. Don, how are you doing? Thanks for coming on again.
Yeah, thanks for having me back.
Yeah, like I threatened you to have you back right after the U.S. elections. So, and glad you're available. Actually, there's lots to talk about, and we purposely postponed the episode by a week. We were supposed to come on last week, and we pushed back because U.S. elections still hung more or less. We still don't have an official results. Yes, the media has called it, but we're still going through some legal battles, and also the vaccine news pushed us back tremendously in terms of market action. There was a bit of a black swan event on Monday as well. So why don't you catch us up, and we'll start talking more detail. Like, what do you see out there? I have your Friday recap in front of us. Why don't you catch us up with the latest?
Okay, well, first, the reason why I wanted to delay a week is, I want to see the outcome of this election. I mean, right after the election, there was it took a while for them to count all the votes. Also, I wanted to see a little of the reaction to the markets. I was surprised that the markets accepted the Joe Biden victory so easily. I guess there's a lot of confidence that with a split Congress, with the Senate being controlled by the Republicans, and if they do hold those 2 Senate seats in Georgia, that people think that there's not going to be any dramatic moves economically, in tax law or anything economic law, that's going to hurt the economy. It seems like we're still in the mindset of it doesn't matter who the president is, which party's in control, if it's a Democrat or it's a Republican, you're going to still get the same type of policies. But I disagree with that. That's why I said that I was expecting Biden to win based on the polls because they were so wide. I just gave him the edge. So I thought the markets were going to fall after the election. I thought people were going to come to the recognition that a Biden administration is not going to be, say, as good as a Republican. I mean, Trump, I think it was pretty much fully focused on the economy. I think that was his number one issue. And I don't think it's going to be the number one issue for Biden and the Democrats. For instance, global warming or climate change, I think, is going to be somewhat of a priority for him. And I mentioned this last time. I talked about how supply side economics has been the economic policy of this country since the 1980s. And I think it's going to start to change. I don't think that the Democrats are going to really be in a mood for 100% supply side economics, and that's going to slow down the economy. But I have other things, other than politics. If we just talk about the economy itself, I think we should talk about that. I think that is not in a strong position. I can't believe the markets are at all-time highs right now. Everybody has to be kind of in shock. It's like, what is going on? I mean, where is the earnings to push these markets to these all-time highs? We're not even in recovery mode yet. So it's kind of crazy.
Yeah, I told you, like, Don, you have to explain that to me on air. It's like I don't get it anymore, right? Like I'm losing it. And then I ask you as well, like, are we only seeing 5-6 stocks pulling up the indices, or is it really the underlying market in general? Because it seems like we're inching closer and closer to the second lockdown in the U.S. I don't think Canada is too far away, although it's more of a provincial thing. But I don't think we're too far away from a proper lockdown again, because numbers are exploding in terms of COVID. So where do you see that happening? And you made a couple gold price calls as well. So like how the market would react on that. Like, let's run us through that as well. What do you expect to happen there? And
Well, let's just look at next year, 2021. Um, I don't see any type of really strong growth in the West. Now, China seems to be, chugging along. I don't know about Korea and Japan, how well they're going to do in 2021, but the United States and Europe, because of COVID, I don't see this V-shaped recovery that the stock market seemed to be implying. So, MMT to the rescue. They're going to try to, inject liquidity, inject stimulus, and try to get the economy going again. But that's going to have put downward in the U.S. That's going to put downward pressure on the dollar, depending on how much money they spend. The Senate, I think, is going to be somewhat ambivalent of spending money, which is going to put pressure on the economy, because as the economy is weakened and they don't want to do stimulus, because I don't see the Senate really being, buddy-buddy with Biden. I think there's a lot of dissension between the Republicans and the Democrats, and I think everybody's saying absolutely. I don't see that going away. So if you go into 2021, how are we really going to get things going again? Even if we do a big infrastructure bill, I don't think that the Senate's really going to give them $2 trillion to do an infrastructure, maybe $1 trillion, but that's not going to do it. That's not going to work. It's not going to get the economy back growing again. Say 2.5% going back. I mean, 2.5% year over year. Once we get to the second quarter, I think that's when the problems are going to hit. And I think we're kind of entering a period of, this is kind of like a Japanese economy, where you have low interest rates and you have low growth. And I see us just, muddling along and then kind of hitting a wall in the second quarter. We'll see. I mean, right now, I don't see how we're really going to just start roaring again. I think we're going to be muddling. It's going to be tough for this economy to get back on its feet. And in the U.S., I mean, this goes all the way back to the last recession, 2008, 2007, 8, 9 period. The U.S. really hasn't overcome that. Technology has gone forward, which is very positive for the country. It's created wealth, and healthcare industry has created wealth. But on the whole, I mean, if you look at the absolute strength of the economy, I think the middle class has, seen the brunt of it, where it's been harder and harder, and I don't see that returning. So one final point is the U.S. dollar. So the U.S. dollar, it's hanging in there over 92. Right now it's at, last time I looked, 92.6. So it's hanging in there, but 92 is like the line in the sand. It goes below 92, it should fall below 90, it gets below 90, and then you're going to start to see a lot of people nervous on Wall Street, and you're going to see a lot of, it's going to be harder for the Wall Street to go higher. So I think, for instance, I'm a bear. Anything over S&P 500, over 3,400, I'm a bear. So at 3,600, I'm a bear. I just don't see where this strength's coming from.
yeah, that's a very good point. And I think we just briefly discussed it off air as well. It's the uncertainty in the market. You mentioned the Senate being more Republican, while Biden is trying to push economic economic builds, and that's not going to happen for at least the next 2 years. So the market actually loves that uncertainty, and until we know that, like, where do you think impulses would come from? So Georgia is having their runoff election January 5th. And let's just look at the gold market again. Where do you think we're going to see an impulse from? Are we just going to be as volatile as right now? One thing that has me positive that we're still in our trading range.
Right. So this is actually a perfect storm for gold. So you have a situation where you don't have a strong economy, and you really don't have an engine to create a strong economy. So that's going to create the fear trade. Everybody right now is assuming, I think the reason why the markets are so high is they're assuming that the economy is just going to roar back to normal. COVID's over, we're going to have the vaccine, we're going to roar back to normal, if you will. Well, we haven't had a recession other than this last 12 months since 2008. So we got 10 years. And the only reason we avoided a recession is because of MMT. And MMT is now the new economic, system for both the Fed and the Treasury. And it's worked to a certain extent. I mean, Japan hasn't had a real serious recession since they implemented MMT in 1990, but they haven't had any growth either. So if Japan can avoid one, we can avoid one too. So MMT to the rescue. But the U.S. has a problem. We are dependent on every single month going out and borrowing money to roll over that debt. Japan doesn't have that problem, never did have it, because most of their money that they borrow is internal. They don't go external to the rest of the world and try to have these huge, monthly auctions that the United States does. So the dollar and the debt starts to come into play. That helps gold. So we have this fear trade that's currently in effect. And that fear trade, like last Monday, gold dropped $100, but it recovered. Now it's almost, let's see,
It's
we're at
1890 or
1885.
something, right? Yeah.
Yeah, so it's recovered off of that. That's the fear trade. People are basically saying, wait a minute, I want some gold. I'm going to buy the dip. That fear trade, I think, will stay in play and will basically push this gold bull market higher. So, and the dollar, I mean, if we look out, say, 2, 3 years, something's going to break here. As far as the debt levels, the MMT levels, the U.S. debt is heading to 30 trillion, and we have a new president in office. What we've seen over the last three presidents, I mean, you go back to George Bush Jr., how much he added to the debt after 9/11, and then Obama came in, he did the same thing, and then Trump did it again. So we've had three presidents, three explosions of debt. Do we really think that Biden's going to come in and all of a sudden debt's not going to explode under him? I don't think so, right? So we're going to get this explosion of debt under Biden just as well. So we're going to go over 30 trillion, probably like a rocket ship. So, and that's going to create enormous pressure on the US financial system, in my opinion. It's like, I mean, they're talking about coming up, these central banks are talking about coming up with digital currencies. And one of the reasons why is because it allows them to use MMT more effectively. It allows them to basically, once you have digital wallets, you can send money to a digital wallet a lot easier than you can a bank account, because a digital wallet just has an address. I think that's one of the reasons why they want these digital currencies. That and to track people, but it's such a win-win for them. Okay, if we're going to use MMT, then digital money helps us use it. For instance, they talk about helicopter money. Well, the ultimate way to spend helicopter money is have digital wallets. I mean, you remember they just did the stimulus and they had to mail people checks. Well, just think how much easier it would send people money directly to a digital wallet. Easy as pie, right? So that's what they want to do. But then you just see this explosion in debt. And MMT is an experiment. We do not know the outcome of it. Right now, we're basing our experiment off of Japan. But again, it's like apples and oranges, their economic system versus our economic system. So again, gold has a bit of it hasn't a floor, if you will. I think the floor is probably about 1850, where we're, right now. I'm not expecting to go sub 1800 now, because we got through this election. We didn't have a sell-off. Now everybody wants to buy. So any sell-offs in the market, everybody's going to be thinking about buying the dip. I don't see us going down to 22,000 on the Dow anytime soon. I think we go all the way to the second quarter before we see any big sell-offs. So yeah, we're probably going to have a Santa Claus rally in gold, and then first quarter should be really good for gold. Of course, I could always be wrong, but that's what it feels like to me. Is everything is looking really good for gold and silver now, going into the fourth quarter through the first quarter. So I'm very optimistic. I don't expect to see real big sell-offs, if you will.
Yeah, good point. Because I think the market is pricing in the January 5th runoff election in Georgia for the two remaining Senate seats, right? And it seems like the U.S. or the market expects the Republicans to win that, to have that hung government. For me, it looks like a massive buying opportunity for the next 6 weeks, because once there's certainty on January 5th or 6th, whenever the results come in there, gold should, in my opinion, explode. But because that's just great. Because what are you going to do with we're not going to see corporate tax increase, and we're going to come back to the supply side economics. That's going to be on hold, like the demand side and supply side. The Keynesian MMT might be slower than anticipated. Like Biden's 7 billion build back better is like, I hate that name, by the way. Build back better is like, I keep stumbling over it. Name for the program. It's not going to be waved through. It's not going to be a straight $7 trillion package. So. And that's going to be really interesting to see. But I was going to ask you a little more on that package. Have you taken a closer look at it, especially the green energy, dollars that are earmarked for green energy, or they call it the green energy wave, I think.
Right.
What do you think take away from that? Also for other metals as well, like base metals and zinc, copper, lead as well.
Right. Um, it's you just mentioned the base metals, and that kind of popped into my head. We saw copper go up last night. So one of the reasons why is because Asia seems to be recovering a little bit faster than the West, and Asia is growing faster than the West. A lot of your infrastructure is happening in Asia. And so you're seeing some demand for base metals. I've been very bearish base metals because I thought that the next recession, and we're kind of in it now, was going to be a severe one, and that you were going to have kind of a bear market in base metals, and for considerable one, I thought, for several years. So I was always kind of negative that. But now it's hard to predict exactly what base metals are going to do if we have if this recession, if we have a double dip recession, or the recession gets more serious. I don't think we're really going to have a real serious recession. I'm not expecting a collapse of any kind because of MMT. I think MMT is going to push things along, if you will. For instance, what the Treasury did with the Fed was historic. What they did, they basically made a deal with the Fed saying that if we need money, you print it. I mean, it was unbelievable, the deal that Mnuchin got. So they're going to find ways to, anytime they need money, they're going to find a way to spend it, print it. So I don't think we're going to have as big crash, if we will, with the economy. But I think inflation is definitely a risk. But I just see it as kind of a Japanese economy where we just kind of chug along. And if you notice what Japan's economy has done since 1990, it's been very manipulated by the government. So I think we're going to see, and that's what we've been seeing in this country since 2009. We're going to see a lot of manipulation. So the base metals won't crash, but we're not going to have a 3%, growth rate in the United States. So it's going to be very muddling, but no crashing.
Well, the Japanese government bought a lot of stakes in companies as well to save them back in the day. I'm thinking, and we've seen that in 2008 with Freddie Mac and Fannie Mae, as well, and we'll see that more and more happening because I'm just looking at the commercial real estate REITs and all those commercial real estate companies. Like when push comes to shove, they will need some help, in my opinion. So,
right, the big unknown, the thing that's really kind of insane is that the Fed is completely trapped. They cannot allow us, like I said, we're not going to have a serious recession because they can't have one. Because if we had a serious recession in this country, the dollar would crash. And if the dollar crashes, then we're bankrupt. So they can't allow that. They can't allow higher interest rates because if the 10-year goes to 4%, we're bankrupt because we can't pay the interest payments. So they're so trapped. So the only thing that they can do is use MMT. And I think everybody's starting to realize that, and that's why gold has such a floor underneath it, because in the end, MMT, I think, has to fail, but I don't know when it fails. So it's like, hey, I want to buy gold. And I think one of the reasons why Bitcoin is doing so well right now is a hedge. Yeah, it's a good investment because it's trending and everybody loves the technology and its underlying fundamentals. But I think people are buying gold to hedge against uncertainty. It's like, I don't know what's going to happen with the stocks. So if my stocks aren't very secure, I'll buy some Bitcoin too. So the rise in Bitcoin is also a factor or a sign of the demand in gold as well.
So I actually do have some breaking news within our live special here. It seems like Berkshire Hathaway cut their stake in Barrick just a few seconds ago, and they announced that in their filing, in the 13F filing. So, what do you take? What do you make of that? That Buffett is selling Barrick again, so he's actually getting out of that fear trade, like paper fear trade, I'd say, or a hedge. And I don't know what else he bought. I just saw the headline here, like Buffett's Berkshire shows cut stakes in Barrick. So that's quite interesting. What do you make of that?
I think he's saying that he doesn't expect any type of a crash, that we got through this election and that we're not going to get a crash, and the economy is going to be able to have positive growth. So if the economy has positive growth, he's basically thinking that, there's not going to be this huge run to gold, and that maybe gold, kind of gets stuck here or only goes to 2100 and doesn't go to 2500. It's a risk off. He's basically saying I don't need gold now because I think we're okay for the next couple of years. I think that's what it basically was. He bought it because going into the elections, he thought that there was a chance that we were going to get a big sell-off and that gold was going to go to the moon. And now he's thinking maybe that's not going to happen. And, like what I've been saying, we're going to get a muddling type of economy. So, gold might muddle as well. But in a muddling type of economy, you're always going to have winners, right? So there's always going to be places to put your money in the stock market that are going to do really well. And so that's what he's probably thinking. There's better places to put my money.
Interesting. Yeah, let's talk about Q3 financials. And talking about Barrick actually is a good segue because they produced a fantastic Q3 in terms of free cash flow as well. What's your sense on that? More on the miners now in terms of free cash flow. What do you see? What did you see? What did you like? What didn't you like about the financials?
Yeah, so I'm very excited about it because the industry is healthy right now. We're cleaning up balance sheets. So for me, it's all about the balance sheets cleaning up, because most of the time your miners have somewhat poor balance sheets, because when you build a mine, you take on a lot of debt and it takes several years to basically work that off. If you get strong free cash flow, you can burn it off faster. In the overall industry, you're starting to see that. And so as these balance sheets clean up, the companies become more valuable. That's, for me, that's the key. So, I want to stay over $1,800 gold, for 2, 3, 4 years. The longer that happens, the more these balance sheets clean up. Simultaneous to that is you get a lot of opportunities to build mines. So mines that are economic, say at $1,200, $1,300 gold, now become more, you can finance those mines, you can build them. So you see a lot of these companies that have been trying to build these mines for a long time now, and they're still, a lot of companies, it's amazing. There's a lot of companies today that are still ambivalent about building mines, even, at 1850 gold. It's amazing. So we haven't really turned a corner yet as far as profitability for miners, where we feel really comfortable that, say, $1,800 is going to stick, and that we can go ahead and, banks can loan money, miners can, they can get a loan. These companies are still having a tough time. I mean, Arcana just got a loan to build their mine, and they had to pay a really high interest rate. I mean, and then you see a lot of other companies, and they also had to hedge a big chunk of their production. So it's tough to get loans still to this day. So the financials kind of open up the industry, make things more healthy, get these miners trending again. But the sentiment, you talked about Buffett selling some of his Barrick shares. The sentiment is actually still very ugly for miners. The HUI, I didn't check it today, but on Friday it was at 315. So 315 is half of what it was in 2011, when gold was just a little bit higher than today. Say, $30, $40 higher than it is today. It was at 630. So it needs to go up 100%. And so you can see the sentiment is still ugly. People don't trust the miners. They don't trust the gold price. That can all flip. Once we get over $2,000 gold, and it kind of stays there for a while, you're going to see a run in miners, potential run in miners, because of this really poor sentiment today, and you have the very undervalued stocks.
And just sort of, we're hitting our time limit, but I just want to find out, like after the election, have you sort of repositioned your portfolio a little bit, or have you just not touched it and left it as is?
Yeah, so I actually bought five stocks because I felt that we're not going to. I was waiting to buy the dip, if you will, and so I thought, we're not going to get one. So I actually bought five stocks this morning because this was my buy the dip opportunity, if you will. So yeah, so I was looking for five baggers, and so I was looking at some undervalued producers that I thought were potential five baggers at $2,500 gold. That was my focus, and I think one development stock that looked really, really
What's
good.
your timeline for those, or time horizon for those investments?
Oh, I always do long term. So gold mining stocks, it takes time. So I'm always a 3 to 5 years is kind of a target area for me. Um, yeah, I don't look. I'm not a 1 year guy at all. I'm not even a 2 year guy. I'm always three plus. So all these investments are 3 plus year expectation.
Okay.
So yeah,
Okay. Fantastic. Final question. January 15th. Where's the gold price?
it's at $2,000 on January 15th is my expectation.
Silver?
And 2,000 or north. And silver, January 15th, I think it's going to be north of 30,
Fantastic.
January 15th.
Fantastic.
Those are my
I hope the
expectations.
market gods are listening. I'm not complaining. So I'm all good with that. And I'm really curious what January 5th is going to be, because it seems like there's so much uncertainty still, and the vaccine news and everything that's hitting us.
I, yeah, I want to say one final thing. I didn't really talk enough about supply side economics. This is one of my pet peeves, but I want to talk about it a little bit because I think this is the key for gold to go to $2,500, $3,000. And that is basically, and we're going to see if it happens, unfolds as I expected over the next 4 years. And that is basically a Biden administration that is no longer basically the friend of corporate America. Right now, the expectation is that he's going to be the friend of corporate America. Now, he might be the friend of healthcare industries, and he might even be the friend of some of the big tech names. But that doesn't mean he's the friend of all of corporate America. And we're going to find out just how big of a friend he is based on, for instance, his regulation policies. They talked about overturning a lot of Trump's regulations. Some people are going to be nervous about the miners, that he might go after the mining regulations. That's an issue there. But it's also going to be the auto industry, how much he forces the auto industry to go towards electric, which is going to have some, it could do that. But we have a lot. We have the energy industry that's also could be impacted significantly. But for me, the big one is going to be small business. How does he allow small businesses to thrive? Which he talked about the corporate rate going up. Now they talked about how the Senate's not going to be able to impact that. But does he have his eye on the ball? Is he going to have his eye on businesses getting back on their feet? How does he help that? How does he support that? And then does everybody have confidence in a Democratic administration, for instance, on the deficit? They gave Trump kind of a free pass on the deficit. I don't know if they're going to give a Democratic a free pass. But this whole economic policies over the next 4 years of the Biden administration, I think, is going to be a huge indicator on where gold does over the next 4 years, because the only thing that really threatens gold, in my opinion, is the economy. A strong economy is basically a kryptonite of gold. The only reason why you need gold is a hedge, or the fear trade. You're afraid of the future, something in the future that you need to protect against. So I just wanted to bring that up. Keep your eye on, let's see what the Biden administration is going to do vis-a-vis corporate America, vis-a-vis the
Yeah,
economy.
Biden's policies are complete opposite, like 180-degree opposite of what supply side economics is. Taxes down, decreased regulation. He's all for it. So exact opposites. I'm quite curious to see as well. And January 5th for me is a big date. So I'm really curious if for some reason the Democrats win those two seats in the House in Georgia or in the Senate. I do speculate on a bit of a crash actually, and what you
Yeah,
predicted actually for November like 5th or 6th it might actually happen then January 6th and 7th maybe. So that's I don't know, my gut feeling. I'm not a macroeconomist. I'm just looking at how the market is reacting to things. So
I think it's a long shot that the Democrats win either of those seats in Georgia. People are giving them a chance, but I think the two Republican candidates are solid enough to win fairly handily. I don't even think either race is going to be that close, but I could be wrong.
now I'm curious. Yeah.
Say 3%. I think they're going to win. Both going to win by
Yeah, that's what the
3%.
market tells us right now as well, anyway. So, and that's what it looks like. So, but I'm just saying, if there was an upset, I think we're going to see the crash that you predicted originally. So, and we've seen that right
Yeah.
before the election, actually. Like S&P hit 3250. So, and then the election, and then now we're at 3616 or whatever it
I
is. So,
thought, right. I thought they were coming to their senses, but then everybody said, no, we have no, Biden's no problem. We're good to go.
apparently,
Yeah.
I don't know. It beats me. So we should do this almost every 4 or 5 weeks. I really enjoy our conversations and
So,
get some perspective on it.
so how many views do you get?
We are at, I don't know, we're still live, so I actually don't know right now. I'd have to tell you
The
afterwards.
the last one we did, how many views did you get on YouTube?
YouTube was 300. So it,
Oh, that's it. Okay, so you don't get a lot. All right. So, well, then I can do this. So, if anybody wants a free trial to my website, goldstockdata.com, just send me an email and I'll set you up for a 2-week free trial.
fantastic.
I don't do that. I don't do that if there's a lot of views because then it wipes me out.
No,
Right?
no, we're growing, but we got real views, so we don't throw money at it. So I'm quite happy with the retention time on our videos. So it's all organic. I'm really happy with that. So what's your email address?
Just go to goldstockdata.com and then do contact
Fantastic.
us.
We got that
There's a
underneath Don's. Wait, pointing this way, underneath Don's name. I'm trying to make it. Yeah, right there. So Don's name as well. So make sure to go goldstockdata.com. And Don, I really appreciate you coming on. This was our 100th episode. I think it was a bit of a special one, just talking about markets. We don't do that too often. We have a lot of companies on, and it's a breath of fresh air having you on. So I really appreciate that.
Right.
Perfect.
All right. Thanks for having me on.
No, that's great. And everybody else, thanks for tuning in. Thanks for watching. This is for you. This is for the audience, and we really appreciate you. And follow us on YouTube, follow us on Twitter. Hit the like and subscribe button, and leave a comment. What do you think is going to happen in the U.S. or in the gold market, or with the S&P 500? Leave a comment. We'll get back to you. Thank you so much.